live MMTs right here in MMT Stadium. The thing that we're going to do is we're going to take a look at a monthly chart, which we have over here. And it's a standard chart outside of your MMT platform. And on this monthly chart, what we're telling people is that we've had a great burn, 1, 2, 3, 4, 5 month top. And basically, the earnings season is not running the way that it should. We had a great report out of Apple, not Google yet, but IBM, and there was a couple of other names. And the reason why the broader S&P 500 isn't going to make the higher highs is because the financials have got to be the one that lead the way. And basically, without that group participating right now during the earnings season, is that most equities are so overbought, and we've got a monthly buy signal on the S&P, and we haven't had a monthly buy signal in years. That's the reality for the bull right here, is this monthly buy signal. So what I would like to tell everybody is that when you get these monthly buy signals, that creates these big long-term expansion rallies like we had here on the Dow. It's the first monthly buy signal that occurred on 12/1 on a monthly MACD. Institutional hedge fund managers and everyone else look at these buy signals on these monthlies. When the last time you had a monthly buy signal, you'd have to go to 3/1 of 2004. Now, when we had the monthly sell signal on the Dow, that was back in 9/1 of 2008. It's taken all of multi-months that was spent down here at the bottom, and we ascended in that direction, and we've had a long move down, and we've had a re-leveraging. We've had the Fed and all kinds of monkey business going on to create the move. However, the way that we see the current earnings season is that the S&P, to move higher, is that it's going to take a very strong catalyst of underperforming stocks that underperformed in 2010, and it's going to take the financials and the transports. And the problem that we're going to have is that we're so overbought right now. If I show you how overbought we are on the S&P, it's right here. We're at 86.4% overbought on a monthly level. That is huge. That means that we are extremely overbought on the monthly level, and that the VIX and the VXN and the fear indicators are at all-time lows. The problem is with the earnings in 2011, first one of the year here that we're in, is that the good names did not provide a big gap like the IBM and the Apple earnings. That was perfect for a big gap. But the problem is that you have to realize is one thing, that the market has moved in such anticipation that during this earnings season, the upside is limited. Because I can tell you why. When they go to give the great numbers like Apple did, and Apple's been an outperforming stock forever, and so have a lot of them in 2010, except Google. So what I want you guys to know, the more overbought we get, we're going to run into a prime correction, just like we did over here. Small correction, we had it. We did this last year. We have all the live videos on stockmarketfunding.com. And basically, what I want people to know is where we're at within the actual cycle. Because one of the things that we've been doing is we've been shorting names like Baidu down today, and lots of other names that have had reversals. The earnings reports are going to be coming out. The Dow transports are going to be a key. And the financials are going to have to perform. The thing about it economically and all of the financial indicators that pundits make their analysis on is all the MMTs need to know is how to short, because the higher that they go, the more overbought they go, the bigger the shorts that you get that are going to work. And one thing about these transports is this Dow Transports is taking a haircut today. Okay? Now, in the financial services, we've got security and broker dealers getting a haircut off of that Goldman. And nothing but distribution. Now, the S&P banking index is all red today. In order for the S&P to get above 1,300, you're going to need participation out of that group. Now, the retail side of things is the Morgan Stanley retail is a mixed bag, but retail has already ran up to the highs in anticipation of good earnings. Same thing with the consumer. Here's the consumer index right here, the CMR.X. The cyclicals are very important, and they're all taking a haircut today with the S&P. And it's going to take more out of these names. FCX is a leader. Caterpillar's done well. So equities are overbought. They have to come down. Knowing when that the good news is baked into the cake. When you know when the good news is baked into the cake, when you get that after hours earnings report gap, you know to be a seller. We're right in these earnings reports, and the thing about it is, when we start looking around in things like the technology sector, well, guess what? We look at the CBO technology. That's your big cap technology. Got IBM in here, which is positive because of its good earnings reports. And so we're looking at where that top pattern is in these different indexes. Here's a much wider one on the CTN.X. And we're going to be up driving. Here's a disk drive. Disk drives are weak. They're all red. Here's the composite one with a lot of them in the same thing. You can see where some of the gaps were. That's GO gap open. But look at the intraday weakness in the names. So it's very important that understanding what sectors are doing what. And another thing that's very important for new MMTs is on over-the-counter stocks in the primary session is taking a look at the intraday high count, because you got lots of stocks making the high counts, and these are perfect shorting opportunities. The intraday low count, if they're leadership, you can find to walk the dog off the bottom on entries long on ones that are just overbought, that are going to pull back. No one said that things were going to collapse. However, the actual earnings season is not doing exactly what it should be doing, because it's not. And we want to be mindful of it. So basically, that's how I'm going to conclude the report for now.